On this episode of Powerhouse, I speak with Dave Savage about how finding mortgage early in his life sparked an obsession with rewriting the profession from the inside out. We explore the growing gap between corporate leadership and loan officers, the real work of technology and AI adoption, and the uncomfortable truths that separate uncommon originators from everyone else. And we also close by unpacking Dave's first home IQ mission for Gen Z and what mid-level producers must do in the next 12 months to land on the right side of the industry's widening divide. All right, Dave, thank you for joining me.
It's good to be here. Looking forward to the conversation.
Yeah, I really appreciate you taking the time. I've been consuming your content for many, many years. I've never really had the opportunity to talk to you like this or to let alone interview you. So, like I said, I really appreciate you taking the time to talk to me.
Yeah, no, Zeb, I've watched some of your conversations or listened to, and looking forward to hearing where this thing goes.
I wanted to talk to you about your early years getting into the industry because it dovetails into something that I've been talking about privately and more so on camera. And that's that most people who get into the mortgage industry, they don't get into it approaching it like a career, because a career is something that, from the outset, you kind of have a general idea about what a path to success looks like from year 1, 5, 10, 25 years into the career. And this industry, I think, is treated or viewed more like a slot machine, kind of like where you pull the handle and you're either successful or you're not. People treat it more, or they talk about it more like it's sink or swim, right? But like if you swim, then you're successful. And it's definitely not like something like a financial advisor or a certified financial planner or something, right? Where there is that clear, well-defined path for these goals on more, much further than a 6 month by 6 month, increment. And, for me, I certainly had no idea what I was getting into when I decided to become a loan originator. And I was brought in by a good friend of mine who was actually a branch manager. So I say all that to provide a little context for you, because I heard you share an interesting story a while back about growing up. I think you said that you were not particularly raised financially literate. You got into the mortgage industry fairly young. And at the end of your first year, you were like several $1,000s in credit card debt. And so can you share a bit of that story, and to what extent did that first year shape the rest of your career growth and your career journey? I myself, like the first year that I was in the industry, there was a lot that I had to learn about financial literacy, just in general myself, while I'm advising people and talking to people about the biggest, most important financial choice of their entire life.
Well, I will have to say this is my 40th year. So my mortgage startup story, I think, is pretty different than what it is for people today. And then I also hope that as this industry evolves, it becomes even more defined. I know the MBA is going into some schools, and I have a vision of how we can get more young people into the industry as a career and not just as a loan officer. For me, my first year was very pivotal. My first mentor, Mel Samick, there's a number of gifts that he gave me and habits that I created that have lasted a lifetime. One of them was when I got in the business, he gave me the yellow pages, just to date myself, and start with C's and call all the CPAs and financial planners. And hey, my name is Dave Savage with Excalibur Mortgage. I specialize in helping CPAs and their clients with their real estate financing. Do you ever have questions about that? And so Mel taught me there's riches and niches, and literally that served my entire career. Mel taught me the power of lifelong learning. They weren't called podcasts; they were called audiobooks. But I learned how to sell with audiobooks, and I'm ADD and dyslexic, so reading was hard, but listening and then reading less was how I became a lifelong learner. So thank you, Mel, for that. So I do think, again, I turned it into a career. When I got in, it was, all these guys had gotten the mortgage business, and were driving Mercedes. They had bought cars. Like I got in because what an incredible financial opportunity it looked like.
So looking back, was there a specific moment that really flipped the switch for you for like, I'm an originator. I do loans to, I want to, I don't know, rewrite or redefine how this profession operates, because that's very much, it seems, your path that you're blazing these days.
Yeah. So the real career change was where I was experimenting with these different value propositions that, a CPA, a financial planner, a realtor, like would refer me business. And I tried everything from the broker pitch, hey, go with me. I have lots of options, to I'm going to provide you a discount. Anyways, we all know the typical loan officer value props, but my life changed, my career changed when I came up with the value prop that my advice makes a difference. At the time, I had hired an ad agency called Hobbs and Herder to create a brochure for me. And that was my advice makes a difference. And then it was like not having that be BS, but literally having that be something that was tangible, that a consumer could get asked some questions that maybe most loan officers wouldn't ask them. And then to have something tangible. At the time, it was a piece of paper. It's evolved into a digital experience that would help them not just buy a home or refinance a home, but it would help them achieve home ownership with financial freedom. I like to call it financial freedom lending, where we really help people make short-term decisions and long-term decisions that help them. But that was, I think it was 1991 when I created that brochure, maybe 1992. That was career changing. And I probably wouldn't be on this podcast because I also started a YouTube channel. And all of that was, I wanted my advice to make a difference. And I wanted that to be something that was tangible and real.
Right. Actually, I have a question. That was my next question, was about your YouTube channel. But that brochure, was that kind of an aha moment for you, or was it just kind of after just a cumulative effect of wanting some sort of change, wanting to do something different, and you kind of rolled the dice and I'm going to do this thing, and I mean what I say, but I'm just going to see how this works.
No, there was definitely an accumulative effect. I had also, before that, had developed a sales framework that I called Wow Selling. Mm-hmm. And the whole premise to that Wow Selling was just like, hey, winning in this business, whether it's a realtor, whether it's a home buyer, whether it's someone with a refinance, if I could wow them, surpass their expectations in a positive way, in a way that would increase trust, and in a great way that would improve their respect in me. So that happened. And then at the same time of that was happening, I read a book. It was a Six Sigma book. And there was a term in Six Sigma that was called moments of truth, which are these moments of truth within a customer experience that have more impact than others. And I landed on, when you run a credit report and you quote rates and how you do that, it's a moment of truth. I wanted it to be a wow. I wanted my advice to make a difference. And it it was a 1 to 2 year period that led to the founding of Mortgage Coach.
When you mentioned your YouTube channel earlier, you must have done by now like over 1,000 interviews with top producers. And out of all those conversations, or stepping back, looking big picture at all of those conversations, in your opinion, what is the biggest thing that truly separates an uncommon originator from a good one, that most people in the industry either they don't want to hear or they can't quite see that differentiating factor?
So, first of all, when you say Uncommon LO, that's an Instagram channel that I lead now. And I think of uncommon as someone that's winning, like achieving their personal goals, closing a lot of loans. For some people, that's 100 plus loans a year. For some people, that's 50. For some people, that's hundreds of loans per year. And they're doing it in a way that's future proof. So I do think in 2026 and beyond, part of that strategy is delivering a tech, specifically AI-enabled experience, is part of that future proof. And I don't think we're at a point today where you can say, oh, everybody that's uncommon and winning is using it as effectively as they can. I do think by 2026, by the end of this year, there will be such a large percentage of consumers that are AI powered consumers that it's really going to push the majority. But if there was one thing in the thousands of interviews that I've done in conversations with loan officers that separate struggling, good to great, all the great ones have a process and they are consistent. And there's a lot of ways to win in this business, but I've never found someone that is really closing a lot of business at scale over time that doesn't have an awesome customer experience that they execute consistently. And I do find that and I do talk to a lot of loan officers that are either doing good, struggling, and you start talking about like, what is your consistent process? You kind of get like, well, sometimes I do this, and for the rate shopper, I do this, and for the FHA borrower, I do this, and for the non-QM that is just happy that I can get them a loan, I do X. And they're just not delivering that wow experience at scale, which I think the best of the best do.
Yeah. One of the things I want to talk to you about as well, or explore with you, is that gap between the executive leadership and then the tip of the spear, the actual loan originator, that communication gap, and how often they don't even speak the same language. They're looking in two different directions, and you're in a really unique seat to provide perspective, I think, because you work with C-suite executives, but you also work with you work and publish content for originators on Instagram, on LinkedIn, your YouTube channel. So in your experience, how wide is the gap between what executives think that their LOs need versus what LOs actually need? And I don't mean to paint this in a like a winner or loser category, but who do you find is often, I guess, maybe more wrong more often on the needs?
Yeah. Well, first of all, there's a lot of disparity. I mean, there are lenders that really do a great job of selecting a best of breed technology like ours, rolling it out, getting adoption. Even the best of the best would tell you that, hey, adoption of a technology is one of our biggest challenges. And as chief growth officer at Trustage, and really adoption is my number one priority, is helping loan officers go from old school using status quo customer experiences to new school delivering modern customer experiences. So I think it all comes down to leadership. Whenever whether I'm talking to a C-suite, talking to a group of loan officers, I think producing managers, it's still in the mortgage business, especially in distributed retail, that producing branch manager, like if we can get them to lead by example, like lead by example, and bring leadership to their branch, that branch adopts. And if you can do that at scale from the C-suite down. So by the way, why do I still interview top producers 15 years later after I started? Because everyone's different. Everyone is Shayla Gifford in Reno, Nevada, who's the number one market leader in there. Me interviewing Shayla is not going to move the needle for someone in Pascagoula, Mississippi, in an entirely different market. So, I'm always looking for new people, different demographics, different markets, different ways of doing business, and then sharing those, and the more you can get a branch manager to lead by example, the better. The majority of lenders, have a real challenge, whether it's a CRM, whether it's a mortgage coach, getting the adoption at scale they want. But there's a lot more than ever. Lenders are figuring it out, and adoption is going up.
That was going to be one of the things I wanted to talk to you about, was the technology adoption and, I guess, leadership best practices to ensure that adoption actually happens. And so you think producing branch managers or producing managers, that's the key to driving the technology adoption?
Well, there is no one key. So there's first of all, integrations, having technologies that integrate, that you
Sure.
roll out with a top-down vision. I really have three things that I close out with when I'm on a sales rally or
Mhm.
an experience where we're trying to get it, is like, have a clear personal why. Like, if I'm trying to get a loan officer, like, you've seen it, you've heard about it. Why do you want to adopt this and go from what you're doing, unlearning this legacy way of doing something, learn this new way, like, document your why, like, write it down in a sentence or two. We're talking about a 3-minute exercise, have a clear why. And then, like, in the case of our product, it's like, for some people that have good keyboard skills and learn technology, it might be like, do it 5 times. For someone that doesn't learn technology, it's repetitions. Do it 10 times, do it 15 times as quickly as you can. And then share success stories. Do a really effective job of, again, why do I interview top loan officers? I've got like a 30-minute to 1 hour success story. And then I've got a lot of 1 minute, 2 minute, 3-minute best practices. And then just share those. Like, those three things are how we get adoption at scale.
So what would you tell other executives and other leaders, beyond just the tech adoption, that what's one thing that you tell other leaders, I guess I'm trying to ask, is that that they should be listening to from their top producers, that they're most likely not listening to or paying attention to?
So I say this a lot from stage also, is that the fact that you guys are paying for this technology, the fact that we're here rolling it out, is not a competitive advantage. What becomes a competitive advantage is when you build it into your culture, you have a standard, put a lender's name on it, the X way of doing business. And you say, hey, this is a standard. This is a best practice way of doing something. And again, have separate training and communication tracks with your producing managers and people that are the change agents. Sometimes there'll be someone who's not necessarily a producing manager, but they're a top producer that adopts, that's a change agent. And have, a communication chain going with them, have some meetings with them. And then, by the way, this is the other thing. Mortgage companies, they're like, okay, we're rolling out Mortgage Coach or a technology, like it's a big 1 quarter, 2 quarter initiative, but then there's not enough, like, every quarter. Like, we're doing a debrief, we have a plan, and we're playing the long game. And that's how you create culture around any technology, in a way that really improves profitability and gives you a competitive advantage.
Do you think that kind of sits at the core of what a lot of that miscommunication or looking perception, LOs are looking one way and corporate is looking at the other, is that the corporate is forced to look at the long game in a way that the average originator or branch manager doesn't have to. They don't have to see the long game. They don't look at the long game in the same way, I guess is what I'm trying to say. They're kind of looking at long game very differently.
Yeah, no, I mean, that is a real challenge, because let's face it, every loan officer, whether they're incredibly successful or struggling, they have a way that they're using their CRM. I mean, it may be their inbox, it may be their contacts in their mobile phone, it may be something on Google. Like, so people all have a way that they're adults, and they have a way that they're doing these things, and they don't see the big picture. And it hasn't been connected down to the individual. No silver bullet, no magic pill that, like, solves that, other than over time, sharing stories, listening to loan officers, and then building a tech stack that helps them win going forward.
You talked about you brought up AI earlier in this conversation. That was something that I wanted to pick your brain about as well, because I know that you see that as an opportunity. And I'm curious as to know why, or your perspective on why, like, an AI informed borrower is, the way that you frame it is that they're a gift to, basically a gift to an originator, which I don't disagree with. But I'm curious to hear your perspective on why you see it as a gift as opposed to a
Well,
threat.
I don't necessarily know that the AI informed borrower is a gift, especially if the loan officer isn't using tools or technology or isn't prepared to show up. But it's just it is what it is. AI is becoming ubiquitous. There's never been a technology that has gotten adoption faster than what it's getting adoption right now, and it is. I mean, like I use it not daily but hourly for countless ways, and so I think it consumers are using AI in the mortgage acquisition process. I interviewed a loan officer last week that told me, all the different ways that they were using AI, and told me that one of their new top realtors found them using chat. And he was telling a story about a buyer that found him using chat GBT. And so you're seeing it impact the top of the funnel. Consumers are finding the loan officer or the realtor they're working with. And then you're finding it all throughout the sales process, through the loan manufacturing process. And now we're seeing it in the client for life process. We're seeing AI voice being used. At this point, I would say it's in pilot, but it's working. I mean, Rocket, I think, put it in their one of their last reviews that they've got some AI voice that's outperforming humans in some warm transfers. So it's here.
So for originators to evolve, what specific, I don't know, workflow or habit do you think that experienced originators, they need to be willing to relearn or unlearn? You have a phrase around that, in order to survive the next 5 years.
Well, first and foremost, I think it's a advice mindset, and going beyond. I'm a loan officer whose job it is to close a transaction on time at a competitive rate. That's a commodity, and AI could deliver a good rate in a smooth on time transaction, and the machine and call centers are going to just get better and better at that. So to me, the local LO needs to win their database, and they need to win locally. And so, like, those are the two, call it, top initiatives. And then to do that, they need to, like, go beyond closing a loan. Like, your goal with a consumer should be that help that consumer achieve homeownership with financial freedom. And if they have kids and a family, a homeownership strategy to help their kids get into homeownership as young and as fast as they want. For some people, that's in their early 20s. Some people, that's in their late 20s. I don't think most people want to achieve homeownership in their late 30s or 40s. Like, that's not the fastest path to financial freedom in America. So I just think a mindset around that, and then the skills and the habits and the strategies that execute that high level vision.
There's talk of the eventuality of AI, handling full rate quoting and advice, the advisory experience in the not too distant future as well. Like right now we're talking about the originator transitioning to this advisory role to contextualize the information. But what's after that? A year, 2, 3, 4, 5 years after that, well, AI takes over the advisory experience as well. And so that begs the question, not how do I not survive just the next 5 years, but the next 10 or 15 years? Like, do you have any idea of what the role of an originator evolves to, at whatever point in the timeline the advisory role is eventually gobbled up?
Yeah. So one, at IMB, I asked Mitch Kiter, when/if do you think the human will be out of the loop and AI will just automate loans? And he's like, it's never going to happen in his opinion. And I asked him why, and he thought, state regulators. There's humans going to be in the loop. Like there's a lot of political and legislative reasons that, for regardless of technology, there's going to be a human in the loop and everything. Now, The human in the loop is going to be able to do more loans and be more efficient. And when it comes to the advisory experience, like right now, we're literally weeks away from rolling out a version of our product where AI creates the advice experience for the loan officer. And you could say that that's marginalizing a loan officer, but I would say no, that's giving you more time to connect on a human level. That's giving you more freedom to be a human being, learn the hopes, dreams, and goals of that consumer, and then use technology that AI helped you create. You want to make sure that the consumer can interact with it with AI, but I think it just gives a bigger opportunity of humanity. And your differentiator right now is how fast can you learn these new customer experiences and these new workflows. Like that is going to hold a lot of loan officers back. And then I think just being someone that people like, people trust, and you've got these AI tools that are just helping you deliver this modern experience to the consumer. But I think the humans, I'm with Mitch. Like at least I do not believe like the humans out of the loop in the mortgage business in my lifetime. Now, are we going to go from right now? I don't know exactly how many loan officers are closing 20 loans a month. They're like, there's a lot more loan officers closing 20 loans a month, and there's a lot less loan officers struggling because they're either getting crushed by the servicers of the machine, or there's local referral based modern professionals that are just killing it. And I do think we will see an increase in the best of the best and a decrease in just loan officers that don't do much business. Like there's going to be less and less of them.
Right. Another thing that I want to talk to you about was First Home IQ. So First Home IQ is built around the idea that the mortgage industry, not the government, not necessarily schools, really should lead financial literacy for the younger generations, and which I agree. I'm curious as to. I just did an episode about this the other day, and I've seen quite a bit of data on the younger generation's loss in trust in institutions across the board, and particularly in financial institutions, and loan originators are lumped under that trust. Trust in financial institutions ranks incredibly low with younger generations. Loan officers, originators, lending industry is lumped under that umbrella. So it's got an incredibly low trust score. So how do you feel about overcoming that obstacle, like out of the gate?
Yeah, well, the whole thesis on First Home IQ and the way I look at it is that the wealth gap in America is, the front line to that is home ownership. Like who owns, who rents, and it's also never been harder to own. And we talk about how housing prices are high, interest rates are high, but the new generation has things to deal with. Like I don't know about you, but I didn't grow up with bottled water. Like I drink out of a hose, and I didn't grow up where everybody's going to the coffee shop and where there's DoorDash and click button, buy anything you want. So I think the generation today has more challenges to achieve homeownership than ever. And then I also believe in some ways they have more opportunity. There's never been more down payment assistance programs than there are today. I don't want to say there's never been more creative financing options, because we all know what it was like before the meltdown. There were quite a few creative financing options, but sustainable. The non-QM products are rising. FHA, VA. There's like anybody who wants to own a home can get on a plan. Whether you could do it in 3 weeks, 3 months, 3 years. Like if you are empowered and educated, you can do it. And then First Home IQ, our philosophy is that loan officers in the mortgage industry as a whole, given the numbers of us, given the number of credit reports that we run, given the amount of times we talk to someone, like we could be these financial literacy first responders where we're helping people understand homeownership, helping people understand financial literacy. And I think we could actually increase the demand. Like we could bring more first time home buyers into homeownership faster through education and first home IQ. Like that is what we're trying to do. We're going to be at the IMB, or not the IMB, but the advocacy event coming up in April. We're trying to get hundreds of loan officers we'd love at least one loan officer from all 50 states and just go to the Hill and lobby on behalf of affordability and legislation that applies to homeownership.
That leads into what I was going to ask you from, where first home IQ is today to what you want it to scale or evolve into. What does that path look like, and what needs to move, what needs to change in order for that to happen?
So while I'm, a co-founder of the nonprofit, the goal is that it's the mortgage industry's nonprofit to address affordability, but to address financial literacy at scale. That's why, Clayton Collins is on our board, and we built a board last year. We're really working hard to build a great relationship with the NBA and have scale. Like, so my dream is that millions of consumers will be getting educated through First Home IQ content, and that it will be a differentiator for the industry, the mortgage industry, to put a dent in this crisis. Like, there's an affordability crisis, and I think the mortgage industry can put a big dent in it. Mm-hmm. And I hope First Home IQ becomes a tool in a community to do that.
So looking down the road, the next 5 or 10 years in the mortgage industry, I believe I've heard you provide some sort of commentary around this, where there's I lost you. I lost you. I got you back. Okay. All right. I'll start my question. So looking down the road, the next 5, 10 years in the industry, and I believe that you've shared some commentary around the fact that there will be a widening gap between basically like the haves and the have-nots in the industry. So for let's say mid-level producing LOs that are listening to this right now, or branch managers, someone that's not necessarily a rock star, but they're not struggling either. What specifically do you think that they need to do, or what advice would you give them to take in the next 12 months to ensure that they are more on the right side of the haves rather than the have-nots?
So a couple things. I mean, I'm going to start with just AI. I mean, I don't think it's overhyped. I mean, I do think there's a lot of talk without documented results, and there's some incredibly valuable ways that people are using AI, and then there's some noisy, busyness. There's a difference between busyness and business. Right. But you know how you find the difference between busyness and business? You experiment. You use it, and so I just highly recommend. And I feel like the majority of loan officers are anywhere from I'm experimenting, it's really helping me, to like just ninjas. And I know a lot of people that are just like really ninjas and getting a competitive advantage. I mean, this is not new information, but having a brand, remember I said, win in your database and win locally. To do that, you're Dave Savage. Like, I live in Lake Oswego, and if I was a loan officer, I've got a database of people that know me, like me, and trust me. I need to make sure that I've got a brand with them. I'm communicating with them. Social media, it's a thing. If you're watching this or listening to this, you're using social media. And so does everybody need to be a star and have a show? No. But if people, AI, by the way, they're not Googling you. Maybe they are this year, but as we get further into this, they're AIing you. And if they AI you, are you someone that looks trustworthy? Are you someone that looks experienced? Because if I trust you and I think you're really competent, I'm less likely to shop you. By the way, if I trust you like my brother, but you're a new guy, I'm still going to shop you. You know, if you're really respected, but for whatever reason, I didn't trust you, I'm shopping you. So you need to build a brand and a social presence and a digital presence that creates trust and authority, which, by the way, another great reason to join us in Washington, D.C., because we're going to have social media teams and we're going to create a lot of content. So any loan officer that would come, like, you'd have weeks of, hey, I'm going to DC and this is why. You would have content at Washington, DC, and you'd have a great story. You're like, your trust barometer would go up. But use AI, start having a minimally viable brand digitally. Those are two things that I think are future-proofing yourself.
Excellent. That's great advice. All right, Dave. Thank you so much. I appreciate you sharing your time with us.
Good talking with you. I look forward to seeing you in the real world, Zeb.
Yes, sir. Me as well.
All right. Take care.